everyone, this is Evan from the Trade Risk here on Wednesday, March 16th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then I have some trade ideas for us to look at heading into the end of the week. Now, before we get into tonight's video, I want to remind everyone once again that I am hosting a webinar that is now less than 1 week away, Tuesday, March 22nd, 5 p.m. Eastern Time. Head to thetraderisk.com/webinar to join. It's a free event. If you like these videos, chances are you're going to like the content there. You can also click this link up here in the top right-hand corner right now that should be showing up. Head there, register. It's going to be a really good time. I've been working on some of the slides and content for that, and I'm really excited for next Tuesday. Now, getting into tonight's video, it was Fed Day, FOMC statement out. The market reacted positively to the statements, and we rallied above recent highs. So let's take a look at where we are, where we've come from. We came into the week right here on Monday after ending the week last week on Friday on a real positive, strong note, 1.61% up day on Friday. And then we came in this week with a slight gap lower, a small gap lower on Tuesday, and then a small gap lower today. So 3 consecutive gap lowers for the entire week so far, but lo and behold, we had a nice rally today off of the statements. And here's what I want to, a few things I want to point out here. First is, as this market has continued to climb sort of this wall of worry of, either just the skeptics on the rally, the fact that we need to come back down and break through these lows, the fact that we're in, recessionary economy, whatever the case is, the market has continued to grind higher. And importantly, though, it has been climbing higher most of the time in these quote overbought levels, but it has consecutively now twice worked those conditions off by digesting a few days sideways. For example, last week when we came into the week, we were running really hot here, and we spent 3 or 4 days going sideways. Ultimately led to Friday's nice pop higher. Once again, Friday, you could say, well, we're working pretty overbought once again, and we spent Monday yesterday digesting, and then today we once again launched higher. So we're very sort of meticulously, grinding new highs here above the fast 8-period exponential moving average. And I think so long as sentiment is still leaning on the pessimistic side and perhaps not participating in this rally, I think this continues. Now, importantly, a few things to note today. We did close this gap from the beginning of the year, coming back to January 4th, so we did manage to tag that and then pull off those highs just a little bit. We didn't close on the highs of the day, but altogether, I'd say this is pretty constructive action. Now, if you go to the weekly chart, you can see we're almost getting that bullish crossover now on the weekly chart. And you can see here, if you look at this as one big holding pattern, one big range, which is what I believe it is, you can see we just effectively rejected a breakdown at 181.50, below 182 in the SPY. And now we are racing higher. We're through the midpoint of the range, and we're now just heading towards the highs. Again, I'm not saying we have to get there or we're going to get there. It's just that's what price has been doing over the past several weeks. Now, another important note is if you are a professional money manager, then you are getting dangerously close to competing with an S&P 500 that is about to go positive or close to going positive on the year. If we go to the cash market, we are less than 1% from flat on the year, and at the highs today, we were very close to flat on the year. So if you don't think that a chase could happen here as people, as managers and some of the professionals out there flock to sort of get in on this market so that they do not get left behind, then I think you're underestimating sort of the psychology and just what can happen if the S&P goes positive on the year. Again, I'm not putting, necessarily saying to emphasize trading decisions or to get overly risky just because of that. I'm just pointing out that, the chase after something has gone on so long, it's usually the beginning of the rally that's the strongest, and then the very end of the rally that's the strongest. So just keep that in mind if you are still fighting this. But everything right now looks looks good, right? We've worked off, again, as circling back to the beginning of the video, we've worked off those overbought conditions the past few days. We're now pushing higher to new highs in this trend. I think everything is good right now. Until we start to see support break, which at this point now is just keeps getting raised every single time we grind out new highs. So at the very least, you need to take out 201, close below 290, 200.90, and then get really back below 200, then below 198. So there's multiple levels of support below us, and until we start holding below them and breaking below them, I think there's just reason to be involved in this rally, even if you're on the light side, like we mostly have been all the way up, but we have been able to participate, and I think that's key. We did add new long exposure throughout today. We took some off. I think net we probably kept the same, maybe added a little bit. So we're still long this market, but we're rotating in and out of names that move for us, and then new names that set up. So that's sort of my stance here on the SPY. I think the bulls still firmly in control, as demonstrated by today. IWM still just very kind of healthy consolidation going on here. This is a pretty big level that it stalled at just the other week, right around this 108 level. This was critical support back here for multiple years, actually, in the small cap, and I think it needs time, and I think basing like it is right now underneath this major level is very constructive. If the bulls just bring this sideways for another week or so even, and then make another run at 108, I think that's very, very bullish. Not saying that has to happen or will happen. I'm just saying keep an open mind right now. We're consolidating. We're still above bullish aligned, moving averages here. We closed above the 8 period. So again, we're not seeing the IWM rip to new highs like the S&P 500 is, but certainly it had a tremendous run over the past month or so. So don't forget that. And then importantly, Qs, this is breaking new highs here. Remember, we discussed this as an important area to hold, this 106 level. We did a lot of sideways consolidating in this area right around 105. We broke higher, we went sideways again, and now we're breaking higher. So very methodical. I know some people would call it, very lethargic. There's not a lot of energy behind it, but the bottom line is price is moving higher, stocks are moving higher. So at the end of the day, it's up to you as a trader to be involved in that and look for opportunity. So that's where I stand on the markets. I think everything's pretty constructive right here. If we go to some other of these of the major markets, TLT caught a little bit of a bid today. You can see it crawling, latching on to this 127.50 area, 128, where there was some support here earlier in February. This range is still intact. If we start to break below today's lows, I think you need to be cautious. Otherwise, looks like you're still just consolidating sideways. The US dollar, which I don't usually cover too much, and it's probably something I should be covering in the videos. It's something I certainly watch myself, but this is what got crushed today. And and as if we get into some of the metals and other commodities that are very heavily impacted and priced in dollars, gold, you can see this ripping higher today, back into this range that it was in last week, and getting close to challenging the highs here right around 121.75. Silver, this one once again too, and this one I really like the look of silver here. Again, weekly chart, you can see it had this nice little breakout and it's holding up here. Moving averages are catching up. Let's see if this one can get above $15. Silver can really start to move. USO catching a bid again, 5% up move back to the recent highs here. You can see it's still very impressively holding a bid and showing signs of momentum, showing signs of continuation. So I think if we can take out these highs tomorrow, more continuation higher above 10.50, that's going to be very constructive for USO. And even natural gas has been doing very well recently. You can see it's been floating higher here. So this has been constructive. You got this downtrend line that it's coming into again. These moving averages starting to cross back over on the bull formation. So natural gas starting to look promising. I don't like necessarily this levitation higher without a full, back and filled base here. But it's certainly a start. It's looking good so far, but it has a tremendous amount of work to go going forward. Now, if we go to some of the sectors, sector analysis here, my Utilities, we've been long these guys for quite some time, took some partial profits, but these exploded today, up 1.5%. And I know there was some doubt, especially earlier today too. I didn't like the weakness below this $48, breaking below multi-day lows. But after that announcement came out, we got this nice rip in utilities. So we've been long since right around 45, right around here, as it broke out in late January. And we did finally take some profits today. Took about 1/3 of that position off, but everything looks pretty good here. And note, we're back to challenging the all-time highs here, just about right around 49.50 or so. And I think there's sort of a magnet to retest those levels, and that's where I'd look to take a little more profit off of. What else moved today? Materials moved nicely today. Again, a sector that's heavily influenced by what the dollar is doing. Semiconductors had a nice day today as well, up 1.17%. IYR, again, rate sensitive sector there. You can see that's starting to take out and challenge some of this important multi-month resistance. I think notably, it's easier to go the other way. The laggards in the weak sectors continue to still be healthcare, and this isn't anything new. We've discussed this. It had an attempt in a promising looking day here on Friday, March 11th, but that ultimately just turned into a false breakout. IBB still holding pretty weak, down 51 basis points today, and getting back to the lows recently. And even financials, not too impressive today, closing down on the day. So those are the three I would say to stay away from, or if you're looking for short opportunity, if you're looking for this market to roll over, stay with those sectors. Those tend to be where we're seeing underperformance happen. Now, real quick, a couple of individual names. Apple, it's acting real well after breaking above 100. It's back above 105 now. There's a lot of supply when you start to look left, but I think the biggest target and level where Apple's going to start to have some difficulty is right around 108.50 or so. That was a pivot high here in late December. You can see it acted as support through October, September, then going back. So it looks like perhaps it's marching up to this 108 to 110 zone. I think if you're long, you can stick with it. Looks good. Trend is higher now. In this immediate short term, you can see we finally had a higher high here above this January high, a slightly higher low here, and it's now on its next leg higher. So that looks constructive there for Apple. Netflix also looks interesting here. I'm surprised it didn't perform and really start to explode a little bit more. Granted, 1.5% is nothing too shabby at all, but keep an eye on this 99.50 level. If it can start to clear these recent multi-day highs here and shoot above 100, I think you have a trade at hand right there. Facebook clearing above 110, looks like it is going back to retest these all-time highs here. Facebook looks great. Alibaba, this one's trying to clear above recent resistance here. This one looks great as well. And then Tesla is just amazing. Me and I think a lot of people, it's just how it's making this look so easy as it's climbing back above major support and just levitating higher with just a little bit of pause each and every other day, but then it just continues to grind out these 1.5% up moves. So Tesla, very impressive. The next big area, 230 in my opinion. You can see a lot of supply in there previously, and it was the area for some prior pivots where we saw price sort of rotate from buyers to sellers. Now, some individual names to have on your watch list. I have a few to look at. LM, here's the first one. Not necessarily the most desirable sector. This is why I passed on this trade. But you can see taking out recent highs here. That looks good. Trend looks good there. General Motors, this one looking good here as well as it takes out, closes at its highest point since certainly this year, going all the way back to January, December of 2015. So General Motors looking good. MXL, semiconductor name, looking real impressive here, up 7%. This is 52-week highs, not all-time highs, but this one looking real good here, exploding out of this. A little bit too much for me to try and chase, but that one looks good for future setups. OMC, here's another one that's looking real good, breaking above $79. There were a lot of names on my scans today. There were a tremendous amount of names across multiple sectors, and I think that's what keeps me, ultimately, that's why I think I have such a bullish tone right now, is just because of the number of setups I see out there and stocks making new, at least recent highs. So that's all I have for today's video. Hopefully that helped. Again, if you haven't signed up for the webinar, traderisk.com/webinar, I hope to see you there. As always, thanks for watching, and I will catch you next time.